Financial data is the backbone of any AI-driven finance application, and choosing the right source is critical for model accuracy and relevance. Data can come from stock exchanges, government databases, financial institutions, or even alternative sources like APIs and sentiment platforms. In this lecture, we'll explore both free and paid financial data providers, looking at what types of data they offer and how to access them. I'll also walk you through example Python code to retrieve data sets efficiently. By the end, you'll be equipped to source high-quality data for your financial models with confidence. When working with stock market data, it's important to understand both the variety of available sources and their reliability. Free sources like Yahoo Finance, AlphaVantage, and Quandl provide accessible APIs for historical prices, financials, and economic indicators. While these are great for learning and prototyping, they may lack the depth or real-time capabilities needed for high-frequency or institutional applications. For advanced use cases, paid platforms like Bloomberg Terminal, Reuters Icon, and Morningstar Direct offer professional-grade data with extensive coverage and analytics. These sources are vital for tasks like algorithmic trading, stock price forecasting, and portfolio management. Choosing the right tool depends on your budget and the complexity of your project. Here's a simple example of how to fetch stock market data using the yFinance Python library. In the code, we import the library and then use the download function to retrieve Apple's stock data for January 2025. The start and end parameters define the date range. The last two lines display the first and last few rows of the data using head and tail. As you can see in the output below, we get a data frame with columns like open, high, low, close, and volume. This structure is ideal for building financial models, visualizations, or feeding into machine learning pipelines. It's a quick and accessible way to begin working with historical stock prices. Macroeconomic data plays a key role in financial modeling, helping us understand the broader economic environment. This includes indicators like GDP, inflation, unemployment, and interest rates. Free sources such as FRED, the World Bank, OECD, and the Bureau of Labor Statistics provide valuable economic data, especially for academic and public research. For more in-depth or globally synchronized data sets, paid platforms like CEIC and Macrobond offer extensive time series data and professional tools. These sources are especially useful in macroeconomic forecasting, economic modeling, and risk management. While there's no code on this slide, later in the course we'll demonstrate how to pull data directly from APIs like FRED using Python. This example shows how to fetch US GDP data from FRED using Python. We start by importing Panda's data reader, which provides a convenient interface to financial and economic data sources and date time to specify our start date. Using getDataFree, we retrieve the GDP series from the Federal Reserve Economic Data API, starting from January 1st, 2024. The output shows quarterly GDP values in billions of dollars with corresponding dates. This structure makes it easy to analyze trends over time or merge GDP data with other financial indicators for deeper macroeconomic analysis. It's a practical and reliable way to automate economic data collection in your models. Fundamental financial data is essential for evaluating a company's true value and performance. It includes financial statements, earnings reports, and key financial ratios. Free sources like Yahoo Finance, Edgar, and Investing.com offer access to corporate fundamentals such as revenue, net income, and balance sheets. Edgar, in particular, is valuable for retrieving official SEC filings and detailed company disclosures. On the premium side, platforms like Bloomberg Terminal, FactSet, and Morningstar Premium provide in-depth, real-time data and analytical tools used by professionals for valuation and research. These resources are especially useful in building models for stock valuation, screening undervalued companies, or conducting deep financial analysis. Depending on your needs and budget, you can choose between free and professional-grade sources for your investment research. This slide demonstrates how to fetch a company's financial statements using the yFinance Python library. In this example, we're retrieving Tesla's financial data by creating a ticker object with YF ticker TSLA. From that object, we can easily access key statements like the income statement, balance sheet, and cash flow statement using built-in attributes. Each of these returns a structured data frame that's ready for analysis or visualization. The print statements display the first few rows of each report, giving us a quick overview of Tesla's financial health. This method is incredibly useful for analysts or developers looking to automate financial data extraction without relying on expensive platforms. This output displays the financial statements retrieved for Tesla using the Y Finance library. At the top, you can see part of the income statement, including metrics like normalized EBITDA and unusual items across several fiscal years. Below that is the balance sheet, showing values such as total debt and tangible book value, key indicators of a company's financial structure. The last section shows the cash flow statement, highlighting free cash flow, capital expenditure, and debt repayments. These figures are essential for analyzing a company's profitability, financial stability, and capital efficiency over time. With this structured format, we can now easily feed the data into financial models or use it for trend analysis and visualization. It's a practical, code-friendly way to extract high-impact insights directly from public financial reports. Alternative data refers to non-traditional sources of information that can offer unique insights into market behavior and economic trends. This includes data from social media, web traffic, weather patterns, and even satellite imagery. Free tools like Google Trends and APIs from Reddit, Twitter, and OpenWeather allow us to analyze consumer sentiment, social buzz, and environmental impacts on markets. On the paid side, platforms like Kensho, Quandl's premium datasets, and Eagle Alpha offer AI-driven analytics and curated alternative data streams used by institutional investors. These sources are especially useful for forecasting market movements, identifying emerging trends, and enhancing trading strategies with behavioral insights. While traditional data tells us what happened, alternative data helps explain why it happened or predict what might happen next. This example demonstrates how to collect alternative financial data using web scraping. We're targeting Yahoo Finance's Trending Tickers page to extract a list of currently popular stocks. The code uses the request library to fetch the HTML content and Beautiful Soup to parse it. We include a user agent header to mimic a real browser and avoid bot detection. The code loops through the HTML table rows and extracts ticker symbols from the first column. These tickers represent stocks gaining significant attention, often useful for sentiment-driven trading strategies. This is a great example of how alternative data, like trending stocks, can be gathered programmatically and used to spot momentum or hype-driven movements in the market. This slide shows the output from our earlier web scraping code that retrieved trending tickers from Yahoo Finance. As you can see, we successfully extracted a list of ticker symbols such as ADB, PATH, INTC, and many others. These tickers represent stocks that are currently gaining significant interest among investors. This kind of real-time attention data is valuable for identifying short-term momentum plays or for feeding into sentiment-driven trading models. By automating this process, we can continuously monitor market buzz without manual effort. While the list may change frequently, the method remains consistent and reliable. When working with cryptocurrencies, reliable data is crucial for market analysis, trading strategies, and blockchain analytics. This includes not just price and volume, but also on-chain activity and sentiment. Free sources like the CoinGecko API, Binance API, and CryptoCompare API provide access to real-time and historical trading data, making them excellent for prototyping and individual analysis. For institutional use or advanced analytics, paid platforms like Kaiko and Glassnode offer in-depth metrics, including blockchain flows, wallet activity, and sentiment indicators. These tools are especially valuable for algorithmic trading, detecting trends in market behavior, and evaluating the health of a specific blockchain network. Choosing the right data source depends on your needs, whether you're building dashboards, backtesting trading bots, or monitoring crypto market health. This slide shows how to retrieve real-time cryptocurrency prices using the Binance API. We define a list of trading pairs and loop through each one to request its latest price from Binance's public API. The request library sends the GET request, and if the response is successful, we extract the price from the JSON response and print it. The output displays the live market prices for Bitcoin, Ethereum, Solana, and XRP in USD. Method is simple, fast, and doesn't require authentication for public price endpoints, making it ideal for dashboards, bots, or real-time analysis tools. It also demonstrates how easy it is to incorporate crypto data into Python-based financial applications. Using APIs like this allows us to stay updated with the dynamic nature of crypto markets. In conclusion, selecting the right financial data source is essential for building accurate, efficient, and insightful AI applications in finance. Whether you're working on algorithmic trading, investment strategies, or risk modeling, the quality of your data directly impacts your outcomes. Free sources provide a great starting point for exploration, learning, and prototyping. However, for high-stakes environments or advanced analytics, premium data providers deliver the depth, accuracy, and reliability required. Understanding what each data type offers, stock market, macroeconomic, fundamental, alternative, and crypto, allows you to tailor your pipeline to your project's needs. Ultimately, strong data is the foundation of smart finance solutions.